During the last couple of years, over the recent health situation, 650 billionaires increased their net worth by $1.2 trillion. That is a lot of money. To put that in perspective, the entire CARES Act, that act that gave everyone the stimulus checks and helped bail out businesses with their paycheck program, was worth only $2.2 trillion. So how do billionaires pay for expensive things like six-figure watches, six-figure vacations, six-figure shopping trips, or for super expensive things like $50 million jets and $100 million yachts if all their money is tied up in stocks like they have been for the last few years? Well, the answer is quite simple. And fortunately, you can take advantage of that exact same strategy. And after watching today's episode of Renegade News, you're going to know exactly what that strategy is. Welcome back to Renegade News. I'm your host, Glenn Kowalski. Every week on this channel, we discuss the latest news, strategies, and tactics for breaking free from the system, paying less tax, and living anywhere in the world that you want. Now, before I get started, I do have to state for the record that this is not financial advice. I am not a tax attorney, I'm not a financial advisor, and I'm not an accountant. I'm just a guy who's passionate about growing businesses and giving their owners back their freedom and their liberty. And also note that a lot of this video discusses debt, and I personally think that debt is a prison. However, there are places where it makes sense and the strategies where it can be indispensable. So those are the ones that we're going to talk about in today's video. So let's just dive right into it. J. Paul Getty once said, if you owe the bank $100, that's your problem. If you owe the bank $100 million, that's the bank's problem. And that's exactly how the rich get richer. In July 2021, an article in the Wall Street Journal claimed that rising stocks and rock bottom interest rates had delivered a big perk to rich Americans. Namely, it was cheap loans backed by their investments that they can use to fund their lifestyles while they're minimizing their tax bills at the same time. These loans have special benefits beyond the flexible repayment terms and low interest rates on offer. They allow borrowers who need cash to avoid selling in a hot market. With this type of loan, startup founders can monetize their stakes without losing control of their companies, and that is incredibly powerful. So the very rich often use these loans as a part of a buy, borrow, die strategy to avoid capital gains taxes. Many wealthy people are also borrowing against their portfolios, and it's common for advisors at big firms like Merrill Lynch to have dozens of security-based loans outstanding at any given time. In the words of someone who consults with banks on how to manage the risk associated with these loans, you could buy a boat, you could go to Disney World, you could buy a company, and the tax benefits are stunning. Buy, borrow, die. The buy, borrow, die strategy is not new to tax professionals. This approach, or different variations of it, have been used for years to develop strategies for accumulating vast sums of wealth and passing that wealth down to heirs without paying a big chunk to the IRS. This strategy allows you to use the bank's money to finance your life. And billionaires use this strategy to eliminate an income and thereby minimizing their tax burden and allowing them to pump their cash into assets that continually generate new wealth. Many have this false belief that these billionaires are breaking the law. But the truth is these strategies are blessed in the tax code and they're available to everyone, even you. And once you understand how the strategy works, it's really quite simple. There are just a few steps to implementing this strategy for yourself. First of all, you buy an asset. Then you borrow money from a bank or other third-party lender against that asset. Lastly, you die without ever having sold that asset. Now, that strategy really could be renamed buy, hold, borrow, die, because the key requirement for it to work is to hold the asset throughout your life without ever selling any shares and recognizing the gains for tax purposes. Now let's explore how each step works in more detail. First of all, you buy an asset or you start a company. So for example, Jeff Bezos starts Amazon and the values of his shares in Amazon increase over time. When you own an asset, you are not required to pay any taxes unless you receive income from the asset or you sell the asset and recognize that gain. So when Bezos started Amazon, the shares were virtually worthless. Over time, as Amazon grew, the value of those shares came to be worth billions of dollars. However, as long as Amazon does not pay a dividend to shareholders, and tech companies rarely, if ever, do pay any material dividends, and as long as Bezos doesn't sell any of his shares, he will never own any tax on the value of those shares. The next step is to take out loans against those assets to fund your expenses. For example, Bezos goes out and gets a loan from a bank to fund his lifestyle costs and uses his shares as Amazon's as collateral for that loan. Taking out a loan with shares of stocks as collateral on the loan is a way to have access to the value of the shares without actually having to pay any tax on that. So as stated before, if you don't sell the assets, you will not pay any tax on the appreciation of the shares. So you can now use the cash from that loan to fund your living expenses over time. This can prevent you from having to sell any shares to fund your cost of living. The loan proceeds are required to be paid back to the lender over time. Therefore, you do not owe any tax when you receive the cash from the loan. If properly structured, you may also even receive a tax deduction from the interest that you pay on the loan. And then the final step is to die. Heirs receive a step up in basis on the assets inherited. So looking at Bezos again, Bezos' heirs will receive a step up in basis in the Amazon shares inherited upon his death. Under current laws, heirs receive what is called a step up in basis in assets received from descendants' estates. So instead of having the same basis as the descendant, the heir is able to step up their basis on the asset to the fair market value on the date of death. So we talked about this a little bit earlier. Jeff Bezos, when he started Amazon, the shares were worth zero. Now they're worth billions. He doesn't have to pay any taxes on that growth as long as he doesn't sell the assets. Now, as heirs who get the assets, they get to rebasis that based on what the values are worth at the time of his death. So, therefore, that means that when Bezos dies, his heirs will have a basis equal to the fair market value of Amazon shares on his date of death. If those shares are immediately sold, the heir should recognize no gain, as the amount received from the shares and the fair market value will be equal to their tax basis, which is also fair market value. Or they can continue to repeat for generations on generations. There are also other strategies and estate planning techniques for passing down assets to future generations without incurring an estate tax. Next step is to repeat, and the heirs liquidate the appreciated asset, and then they repeat the same cycle like we kind of mentioned earlier. After getting the benefit of the step up in basis, heirs can then sell those assets and receive the cash while they're paying no tax. And that allows them to repeat the same strategy by starting a new business or by buying new shares of stock in another business. And the cycle can be repeated indefinitely, allowing families to generate massive amounts of wealth and pass that wealth down to their heirs tax-free. As I said earlier, I think debt is a prison. And the best way to get out of debt is to grow a freedom-based business. And that's why you should subscribe to Renegade News right now, so you always stay up to date on the latest news and strategies for finding more freedom and liberty in this unfree world. And check out the video that you see on the screen right now. It's our latest upload, and it discusses topics like business growth, cryptocurrency, internationalization, and so much more. I'm Glenn Kowalski from Renegade News, and I'll see you over there.